Hi, I'm Glen Byrne, Director of 6 Point Finance. Today I'm going to talk to you about debtor finance. I'm going to talk to you about what debtor finance is and how it can be used in business to help with business growth. Unlike traditional forms of commercial finance, debtor finance is not secured against real estate. Debtor finance are secured against the book debts of the business, its debtors. What people owe the business for its goods and services provided. By using this form of security, as the business assets grow, access to cash grows for the business as well. When a business uses debtor finance as security, usually within 24 hours, the business can access up to 80% of the value of that debtor immediately and have that money transferred into the business account. The debtor finance provider holds the remaining 20% of the tax invoice until the tax invoice is paid. When that's paid, the remaining 20% is paid to the client, less the service fee by the financier. Often when a business is growing strongly, the cash flow is strained as the business doesn't have sufficient cash to meet up with the demand for the business and its services. Here's an example of how debtor finance can be used for a growing business. As a business grows, you can see that the sales are growing from 100,000 all the way up to 800,000. A traditional source of business finance is an overdraft facility that's secured by real estate. An overdraft facility will have a set limit in place due to the value of the real estate that secures it. In this example, we're saying that the overdraft limit is $100,000. When the business is growing, and as you can see, the sales are going up to 800,000, the cash flow required by the business is going to increase due to the demands of the growth of the business. Say at the moment that their debtor book is sitting at $600,000. At the moment, with their traditional funding in place, they can only access their overdraft limit, which is $100,000, because that's all the real estate security they have. Debtor finance, however, allows you to obtain up to 80% of the debtor book. And at the moment, 80% of the $600,000 equals $480,000 in cash available within 24 hours. An extra $380,000 can make a huge difference to a business that's growing. One of the other benefits for this type of finance is it really strengthens up the paperwork associated with the book debts of a company. As the debtors are the sole security for the finance, it's very important that a full proper process is in place for a business to ensure that their invoicing, proof of delivery and a relative paperwork is in place, because that's what secures the debtor finance. There's some in the marketplace that will say that debtor finance is a significantly more expensive type of finance than an overdraft. I've got to say that I agree that debtor finance is more expensive than an overdraft facility. However, you've got to realise when you're looking at the two different types of funding that you are not comparing apples with apples. As you can see in the example on the board here, an overdraft facility will give you $100,000 and ties up your real estate. A debtor finance facility, not using real estate security, is giving you access to $480,000 without having that real estate security. There's substantially different types of funding facilities, substantially different in terms of what you can get out of both types of facilities. One will have a different cost base, absolutely. However, what you've got to look at is not just the cost to physically have the facility, but also the opportunity cost that potentially is there by being able to access the cash and grow your business faster. One of the other factors that you need to consider with debtor finance is it allows you to pay certain things that sometimes a bank or traditional source of funding won't. For example, tax debts. Many banks will not provide funding to businesses that have tax debt or tax arrangements in places. Debtor funders, however, do not have the same issues. So if you need access to cash and you have a tax debt or a tax arrangement, debtor funding may prove to be one of the few vehicles available to you to be able to get funding for your business. Now, getting the right type of finance for your business is crucial. Getting the right advice for that finance is also crucial. What you've got to realise is that not all banks provide debtor finance. So If debtor finance is the most appropriate product for your business at the moment and your bank doesn't provide it, do you think they're realistically going to recommend it to you when it could mean that they're going to lose your business? I don't think so, do you? I strongly suggest that you talk to your finance broker about your business, about your cash flow, and to make sure that you have the right financial structures in place for your business. Many business owners could have a lot less headaches if they simply realised that there was a lot of opportunities available within their business that they may not be aware of because their bank isn't telling them. I hope you found this video informative today, and if you have any requirements for business finance or you'd like a review of your business to see if there's some cash flow opportunities for your business that you may not be aware of, please give us a call at 6 Point. We'd love to help you. Thanks for watching and have a great day.